Now for a closer look at what is playing itself out in that market scene is Patrice Rassou from Ashburton Investments. Patrice, thank you for your time and good afternoon.
Good afternoon, Alexander, and to all the viewers.
All right, Patrice, it's a brand new season here with September, but I would say September's rocking the markets.
Yeah, September always a bit of a tricky month in the market, and then that goes into October. I mean, we've had quite a surprise in terms of noises of regulation for Nvidia. The share was down 9.5% overnight. I mean, in terms of market cap, they've lost, I think, over $280 billion. That's the biggest fall in market cap in history.
Wow.
That just puts you into the picture. So that's really rocked a lot of the Asian markets and Japan and Europe. Actually, on a relative basis, the JSE, as you mentioned, down 0.5% is doing relatively better. So we're holding a slightly better in the sea of red.
Patrice, what happened with Nvidia? What caused the sell-off? Or what jitters are we seeing emerge here? We have seen PMI come out of the US. It is lower than 50, so in contractionary territory. But I mean, is that what drove Nvidia down?
So in the case of Nvidia, they reported results about a week or so ago. The numbers were above expectations, but there were concerns about the outlook with one of their new chips, new AI chips, which would be delayed, which led to concerns that they wouldn't be able to continue with the type of rate of growth that we've seen. And then more recently, there's been type of noises about regulation which might come into play. So I think the issue is when a share like Nvidia has done so well and is such a big part of the stock market, I think any type of slightly negative news can lead to market participants dumping the share.
Another interesting one there, and I think I just touched on it, but the US PMI is below 50 here, Patrice. China's PMI was below 50. The Eurozone inflation was below 50. And ours, I guess, to a less surprising degree, also below 50. This, for me, does speak of a downturn. But more than that, more downturn than we've seen in the last year and a bit. And we've seen downturn in the last year and a bit.
Yeah, I think you make a good point. So we've had around the world and in South Africa interest rates increase quite substantially, and usually it takes about 12 to 18 months for interest rates to have an impact in terms of the economy. And what that means is with higher interest rates, higher funding costs, you have companies who stop investing, you have demand which slows because the consumer is burdened by credit card debt and other type of debt that they have, and then manufacturing declines. So you speak about China, four months of manufacturing declines. If you look at that in terms of impacting commodity prices decline, and that's negative for our terms of trade. So what we're getting for our exports in terms of dollars is reduced. So all these things has an impact in terms of driving the global economy to a slowdown. The question is, are we going to head, or are we already in recession?
Another one that I'm not quite enjoying at this time, Patrice, is that Rand too close to the 18 mark, I would say. What's driving that one?
Yeah, in terms of the Rand, I think we need to look at the US dollar itself. I think the Rand was one of the best performing currencies in the world over the last 3 months, or at least since our elections. The dollar seems to be making a bit of a comeback. There were concerns that maybe the Federal Reserve would be forced to make at least a 50 basis point cut and a few others like this in the months to come. I think now there might be more of a measured view that 25 basis points would be enough. So depending on the rate of rate cuts, you find that the dollar seems to be rebounding a little bit. Basically, if the rate of rate cuts is a bit slower, the dollar might get slightly stronger in the short term.
Speaking about rate cuts, I think that plays perfectly into some company news that we got out today. Let's start off with a Cashbuild here. We did see a 5% increase in the top line, but of course that did not move all the way to the bottom line. We see HEPS down 22%. This is a business that has just been, I think, battered by the state of the South African consumer.
Yes, spending. I mean, especially when you're thinking in outside of the main urban areas, has slowed. Again, this is linking to your earlier questions that with higher interest rates, it reduces disposable income. We've seen like an improvement, and I think the share has benefited from the fact that in the first 6 weeks of the new financial year, basically after June, they've seen total sales increase by 5% and a bit better sentiment. So we're seeing some positive turn in terms of consumer confidence and maybe a bit more spend going forward. So the share is down only slightly. I think most investors are looking to a better 2025.
Then I must ask you about Woolies. This is one that I would have hoped would just enjoy more resilience here, but they've posted a near 17% drop in their HEPS there. I'm also just keen to find out your thoughts on Woolies as a full business here, Patrice. We do have the food side really showing some resilience, but the clothing side really battling.
Yeah, I mean, it's a good observation. I mean, it's always been the Achilles heel of Woolies. I think the food business is solid and it's a bit of a niche, even though we've seen Checkers in that upper end of the market attacking the market share of Woolies. But it's a clothing business which is really under pressure. I think there again, it's a disposable income story. We've had a weak trading environment. We've seen some issues in the Country Road Group. And also the level of competition. I mean, it's been widely publicized, competition locally, and also you have imports from Temu, for instance, from Shein, coming in and making it quite tricky for our apparel retailers to raise prices. So a lot more choice for the consumer, but a lot more difficult and operating environment for our retailers to operate in. So as you mentioned, down 17%. I think it's very tough until we see a disposable income recovering and interest rates getting cut, maybe from September.
Another interesting one is that it looks like Woolworths might have to divest from the ports until, things get a little bit better there, because it's not the first time, Patrice, they quote issues at Transnet, the ports and the congestion there. And it just seems like such an unfortunate reason for them not to be able to compete effectively here, especially as the TFG has localized, their operations quite a bit and they're benefiting quite well.
Yes, you were breaking a little bit.
Yeah.
I mean, when it comes to ports and volumes, we've seen a bit of a pickup from Transnet already. I think there is a need for our infrastructure to get back on track, and that will help the velocity of trade across the economy. I think this is something that's really needed to drive growth forward above the 2% target that we all need.
Let's get into some stock picks now, Patrice, maybe starting off with counters that have found favor with your industry peers.
My stock pick for today would be Advtech. Its share price is up about 30%, and there's a strong likelihood that it could end the year with the fourth consecutive year of gains or value growth, which is a good sign. The underlying business is healthy. It recently reported its half-year results, where revenue increased by about 9% to just over 4.2 billion. We also did see its headline earnings per share up about 16%, and this was primarily driven by growth in its enrollments and also fee increases, which essentially cushioned the top line. We're starting to see more people considering private education for their children as an alternative to public sector education, and Advtech does stand out, at the forefront of this sector, with some of its institutions such as Varsity College and Crawford International, among others, being such key brands that are driving its business growth. So yeah, that's one stock to look out for. I do think it could close the year on a positive note, but we'll be yet to see what the results show for the full year.
Well, Patrice, it looks like we've got Advtech to discuss. I'm keen to get your thoughts on that counter.
Yeah, Advtech is a company which was under pressure. They got their act together. I think that the demand for private education services is one which is, there's a lot of pent-up demand, and in terms of the quality of the product that they have. I think this is something that where demand exceeds supplies. At some stage, there were concerns that the level of competition in this area was getting excessive. I think in terms of their own business model, they have rejigged their model and be able to be in a situation where they can deliver margin on that. So again, it's a long-term play. I think they've done very well and they're on the positive footing. And I think, yeah, they will continue to do well given the type of trajectory that we have with our young population having this pent-up demand for further education.
And then let's talk about your pick this afternoon.
Yeah, my pick this afternoon is in the theme of a recovery from SA Inc. I'll go for Bidvest. It's one where we're seeing the freight business doing extremely well as volume increase. As you know, they have put their bank on the block to be sold. There's 60 bidders for the bank that should release some capital. They are expanding their footprint in the hygiene and cleaning business in overseas in Southeast Asia, in the UK and the US. So I think they're building quite a formidable business in the services area. It's quite a defensive area. It's one where you have long annuity income and where they can really build something quite formidable. So in terms of the whole SA Inc. recovery story, I'm going for Bidvest.
Brilliant, Patrice. Thank you for your time today. A pleasure having you on Business Lunch. So that was your midday markets update with Ashburton Investments, Patrice Rassou.